U.S. stocks rose for the third consecutive week, continuing their rebound from early September's sharp decline. The S&P 500 and the Dow Jones Industrial Average each gained 0.6%, further extending their climb to record highs achieved in the previous week. The NASDAQ Composite also advanced, rising 1%, although it remains 2.8% below its all-time high set more than 2 months ago. One of the key drivers behind the stock market's recent strength was continued optimism about inflation. The U.S. Federal Reserve's preferred inflation measure, the Personal Consumption Expenditures (PCE) Index, released on Friday, showed further signs of cooling price pressures. The PCE Index rose at an annual rate of 2.2% in August, slightly below economists' expectations and marking the lowest inflation figure since February 2021. Excluding volatile food and energy prices, the core PCE Index rose by 2.7%, in line with forecasts, suggesting inflation is slowing but remains sticky in some areas. The U.S. economic landscape remained robust, with second-quarter GDP growth confirmed at a 3% annual rate, unchanged from the previous estimate but slightly exceeding economists' expectations of 2.9%. This resilience was further reinforced by a labor market that continues to surprise on the upside. Initial jobless claims for the week fell to 218,000, the lowest in 4 months, signaling continued strength in employment despite mixed expectations. Meanwhile, consumer sentiment showed improvement for the second month in a row, reflecting increased confidence. The University of Michigan's Consumer Sentiment Index rose to 70.1 in September, up from August's 67.9, reversing a downward trend that began in the spring and suggesting that consumers are feeling more optimistic about the economic outlook. In a bid to counter the slow growth in the world's second-largest economy, the PBOC announced plans to lower borrowing costs, inject additional liquidity, and ease mortgage repayment burdens for households. These moves are intended to boost consumer spending and investment, which have been tepid in recent months. Investors also turned their attention to the upcoming U.S. labor market data for September, due to be released on Friday. In August, the economy added 142,000 jobs, an improvement over the prior month, but still below economists' expectations. With revisions lowering job gains for June and July by a combined 86,000, market participants will be closely watching the September report for signs of continued labor market cooling or renewed strength. In summary, U.S. stocks continued their upward momentum as inflation showed signs of easing and economic data painted a picture of resilience. Investors remain cautiously optimistic, balancing hopes for steady growth with lingering concerns about potential headwinds in both domestic and global markets.